All right, welcome back, guys. So we've been looking at price on a live market perspective, right? So I just wanted to show you what it feels like to sort of backtest and have price move at your own pace a lot faster. Like I said before, this helps you learn a lot quicker, you know, helps you take in more information a lot faster than you would on a live market, right? So that being said, let's hop right into this chart and see what's going on. Take this off. Euro dollar weekly chart, right? And this is back in 2022, real market data. So yeah, we are safe to sort of trade this. On the weekly chart, we see that price has swept this low, that price has swept this low and this low, right? So it's heading for this one right here. But there's also a situation where, as we see right now, price could be oversold. And right here, we're starting with the markets. Well, the previous week closed with a very big bearish candle. So we might get a pullback on lower time frames. But for now, this is our big weekly target right there. And then let's just mark this out as a level where price could be reacting from, right? So just gonna annotate this weekly low. Right, so just check for anything else. Is there liquidity? Well, way up here, I don't think we'll be trading there anytime soon. So we can work with this right now. Let's move to the daily chart, right? Right here we have this weekly low, and then if we do trade below this, we would know that we're heading for that lower weekly low, right? The one that we presumed price was heading for right here after sweeping all this ones, but there is a chance that we get a reaction from this low right here. So on the daily chart, where is price heading to? The next draw on liquidity, while we see peak price not closing with a body below this low, a sort of failed swing, creating another low right here, right? A good indication that price wants to sort of head forward, head to the upside. So if I took my rectangle and mark this up as a daily fair value gap, I'm just gonna make that blue. It's a daily fair value gap. I like to use the blue color for daily institutional levels, and this one happens to be a fair value gap. Yeah. So right now price should be aiming for this daily high right there. If we can mark that out. Try to make this so I won't be annotating just everything. So that daily high and this fair value gap. So reckoning price would buy. Oh, and remember, this is a push. If we go on the 4-hour, we can use this range from there to there. Look at that. So yeah, this is that daily fair value gap. So zoom this out so I want to see everything, right? So on the 4-hour time frame now, on the 4-hour time frame, we should be working with this lag right here from there to there. So if I just draw out my Fibonacci right there, my Fibonacci right there. Just want to get it. Doesn't really matter, bro. All right, so we see that we are in the discount area. And the discount, and as long as we're in this area, I'll be looking for buys, right? This is that daily high that we spotted on daily time frame. We see a 4-hour high that we could also aim for that for short term. On the short term, that price could reach for, could react from, reach for and react from. Right, so that's a 4-hour one. That is a daily one. So ultimately, we are going to the upside. So that's how you sort of do a top-down analysis. And if we drop to the 15 minutes, Um, Split price forward. This is way too quick. This is way too quick. One thing I forgot to do, I always like to do, is put on my daily separators. So we're just at the start of this day, and if we're expecting sales, the Asian range right there. So the Asian range right there, we see that price hasn't swept it. 12 a.m. low. If I can just show you a representation of that. Right there, we didn't sweep it. Price just went up. So grab those liquidity to the upside. Let's see. Closing the candle. This for our candle closes above them, then that's good confirmation that we are going up. Rightly, price for that candle, this it did close above those highs, so we can take them off. Good indication that price is going up, right, to that daily fair value gap, and we should be getting a reaction when we get up there. So let's break price forward a little bit faster, please. That's the start of a new day. We're expecting buys, right? We remember we're at discounts, expecting more buys. We just closed above here. We can see price reacting from this 4-hour fair value gap right there. If you decided to mark that out, see price respecting and reacting from there, right? So heading for this low right there. So this low could serve as a sort of liquidity grab for price to down now for price to do its real buying move, right, into the premium area. But then again, we're looking for buys and we're looking for setups. We're looking for a day that just gives us our setup on the platter of gold, right? Just gives it right to us right there. So pause is right here, where we've obviously swept the low, an Asian range low, and we just swept this low right there. So we're expecting a buy. Also, you see a bearish flag, so there should be a pullback. There's a favor for our fair value gap right there. You can mark that. Can mark this. So this is what price does, respecting fair value gaps. And this is what you do as a trader. You just sort of like watch it to see that it is, doing what you want, and eventually gives you a setup, right? Respecting sales. Is this happening in our kill zone? No, that's happening way after New York, right? After New York, that was when that was happening. So let's keep playing price forward. Expect price to trade right into there. Sweep over low again. Sweep over Asian range low again. Right there. And then we had a quick surge into that fair value gap right there. Quick surge at the start of the day. We saw a sweep of low. Traded up, not leaving it. Closing above swing highs, right? Good indication that price still wants to head up, taking that 4-hour low. But going back to grab that weekly low, that initial weekly low that we saw swept here, went back there to grab it. That caused a reaction into this fair value gap, right? So let's just keep watching for price. We saw price close the body above structural highs, no fair value gap. Is this happening in our kill zone? 2 o'clock. Well, the move didn't happen in the kill zone, but I look at that. That's a little bit too much for a pullback for price to come and give us an entry for. Is a little bit too much in terms of a pullback. It's traded quite some already. So let's just play price forward and see what it does. It looks like it's respecting that 4-hour fair value gap, right? So again, at the start of the day, is this the actually no, that's not the start of the day. See price keep going down back to that level, that weekly low. that weekly low. And we could just take this off right here. Take this off right there because we have new lows that we could be working with. This 4-hour low right there that we can be working with right there. And we want to see that swept, right? To sort of give us a head start for the new day in terms of a buy move. So price trades down to that low, sweeps it, and then on this day probably give us a setup, right? That's what we want to see. Okay, let me just put that. Okay. I always want to see all my adaptations so I know what's going on. Yeah, so we swept the Asian range low right there, 7 to 12 a.m. So a good narrow Asian range. Good narrow Asian range. And we took the low right there. Structure to the upside, right? Let's play price forward. Let's see what happens. So this is really good right there. What's happening right now? This is really nice. An imbalance. Price closing above structural highs right there. So a break of structure with body closes right there. And that's a picture of what we are looking for in terms of a setup. The fair value gap was created right there. And a target, a 4-hour target, well, this fair value gap was respected already. So for me, I'll be taking that off. And if you zoom in, if I'm correct, if you zoom in, you see fair value gap, another one right there. We're already inside of this one, a reaction from it. We just traded up into there, right? Hopefully price respects that, and that sets the basis of a retrace back into that gap that we just saw created on the 15-minute, right? So let's play price forward. Let's see what happens. Like I said, that's tiny 4-hour gap right there. It's causing a retrace. So this is a really good setup right now. This is we've determined from higher time frames that price should be buying, right? And we've gone several days without seeing a good setup. This should give you the idea that not every day is a trading day. And although we can play price forward now and have price move at our own pace, you're not going to get a setup every day. You have to be patient. You have to be patient. You have to wait for your setup to appear, right? And this one is looking good. So I'm just going to do what is basically standard protocol to me. Well, not this yet. Grab your Fibonacci. Grab your Fibonacci 2 and this push, the entirety of that push, right? From there to where the back stop. So swing high to swing low. We see one here. You can work with this one, or you can go with the entire push. Can be from swing high to the, can be from here. This is a swing low rather. You can work with that one on do any of the entry points fall into the gap? All three of them fall into there actually. All three of them fall into there actually. So I'll be using the first one. And if I can get my stop to a safe zone there, I can aim for a 2-to-1 risk to reward ratio, right? Can aim for a 2-to-1 risk to reward ratio and hope that my 2R hits, basically trying to double everything that we put in the market. So it's going to play price forward. Let's see how this delivers. It pushes up quite some again. So what I would do in this situation, right, is I would remeasure. I thought this was a pullback, but it turned out not to be a pullback. So I would remeasure that. And just to confirm, cross-check that this is happening in my Q zone. So 2 a.m., 2 a.m. New York time to 5 a.m. So we're good because this fair value gap was created inside of the London kill zone. Was created if it was created outside of London, I wouldn't be taking this trade, even if it was going to turn out to be a good. I wouldn't be taking if the fair value gap wasn't created in London, any of my kill zone, London or New York, I wouldn't be taking this trade. All right. If the fair value gap wasn't created in any of my kill zones, London or New York, I wouldn't be taking this setup, right? So when we remeasured that, we saw that one of the entry points moved away from the fair value gap. So I'm just going to be using the first one that's still in the fair value gap, which is the 0.705 level on the Fibonacci. So if we can get that retraced back into there, let me just do this. We get that picture. We can get, I'm just going to play price forward. Okay, so we're in the trade. I can take this. I can take the Fibonacci off. Take the Fibonacci off. We're in the trade. And that just turned out to be a very, very good trade. You can see we had little to no drawdown. So this is a good picture of what you want to be looking for in the market, right? All right, so for entry projections, right, I'd be using this flag right here. Swept a short-term low. Be using this flag for entry projections right there from wick to wick. -1 falls there. And then we have the -2. Does this gap right here, does this area fall in a higher time frame institutional level? Let's check. I like to use the 4-hour. There we have a swing high that price should be grabbing on the 4-hour, sort of the next draw on liquidity. And it falls in one of our projections, so we can use the 2. We can even use the 5. You already made it there. And if you use the -2.5, you played price forward, it's going to go for that high. It has to go for that high anyway. So we should be getting that.